Imagine waking up in 2026 and realizing you missed the biggest stock boom outside the US, all because no one told you where to look. While everyone's been laser focused on Tesla, Apple, and Nvidia, something unusual is brewing across the Atlantic. Quietly, strategically, potentially explosively. This isn't just a prediction, this is your wake-up call. Because if you're 18 to 30, you still have time, just enough time to position yourself before the herd catches on. Let's face it, we're addicted to US stocks. AI, big tech, meme stocks. It's sexy, it's loud, it's flashy. But while we're staring at the NASDAQ, Europe has been setting the stage for something bigger. Quick question. When was the last time someone on TikTok told you to buy a German industrial stock? Yeah, didn't think so. Europe's been underperforming, sure. But beneath that quiet surface are signs of a potential explosion. Inflation cooling, energy stability returning, innovation in green energy, AI, and semiconductors rising, valuations discounted. And to a smart investor, that spells opportunity. And here's the kicker. Wall Street knows it. But they're not talking about it, not yet. Let's dive into what's shifting behind the curtain. 1. Valuation, disparity. European stocks are undervalued. While US tech trades at 30 times earnings, European industrials sit around 12 to 14 times. That's not just a bargain, it's a screaming signal. 2. A green renaissance. The EU has committed over 1 trillion euros to climate and sustainability programs. Translation: massive capital is flowing into renewables, EVs, and hydrogen infrastructure. Meanwhile, back in the US, we're still trying to get Congress to define what infrastructure means. 3. Resilient workforce and demographics. Europe has quietly cultivated a highly skilled tech and manufacturing workforce, with a wave of tech unicorns emerging from places like Sweden, Estonia, and the Netherlands. Yes, Estonia, Google it. The game is changing. 4. De-risking from China. With the global tensions rising, Europe is pivoting to self-reliance. That means massive investment in homegrown supply chains, chips, and AI. The pieces are moving. But here's the plot twist. Europe has the potential, but it also has risk, political instability, rising far-right populism, energy insecurity from wars, aging demographics, one wrong move, and this could all implode. So, will European stocks skyrocket by 2026? It depends on this one key factor that most investors are ignoring. And it's coming up next. Smart money isn't waiting, it's already moving. BlackRock, Vanguard, and Goldman Sachs are increasing allocations to European equities, especially green energy, industrial automation, and luxury goods. So how do you, a young investor in the US, get in on this? Here are 3 powerful beginner-friendly ways. Strategy 1, low-cost European ETFs. Examples, $IEV, $VGK, or $FEZ, diversified exposure to top European companies. Strategy 2, targeted country plays, Germany manufacturing, France luxury, Sweden tech. Consider Siemens, LVMH, ASML. Strategy 3, thematic growth, green energy ETFs like ICLN with European exposure, future-proof sectors, renewable tech, semiconductors, EV infrastructure. But hey, don't just YOLO your next paycheck into some Italian steel stock because a YouTube voice told you to. Always do your own due diligence. The next wealth wave may not come from Silicon Valley or Wall Street. It might just come from the streets of Berlin, the tech labs of Stockholm, or the wind farms of Denmark. You're not too late, you're not too small, and you don't need millions to start. You just need the awareness and the courage to act before the crowd. Want to double down on international investing? Tap into the next global underdog, China's EV giant NIO. They just posted record sales. but their losses are skyrocketing. Why? Click the video on screen now to uncover the truth, because what you don't know could cost you everything.